What's up, crypto enthusiasts? Welcome back to my channel. Today we're packed with exciting news and updates from the world of cryptocurrency. We'll be covering the U.S. Senate's rejection of the SEC's crypto accounting rule, the latest Bitcoin price movements, Binance's new anti-counterfeiting wallet algorithm following a $68 million hack, J.P. Morgan's report on falling Bitcoin mining costs to $45,000, and China's crackdown on a $1.9 billion USDT underground bank. Before we dive into all that juicy stuff, don't forget to smash that like button and subscribe to the channel if you're new here. I bring you fresh crypto content all the time, so you don't want to miss out. Hey there, let's chat about the buzz in the U.S. Senate. They just passed this resolution, H.J. Resder 109, and it's a game changer. It's all about knocking down this SEC rule, SAB 121, which was making banks put their customers' crypto assets on their balance sheets. A lot of folks thought that was a roadblock to innovation. So, the Senate vote went down on May 16, 2024, and it was pretty decisive, 64-38 against. Now, President Joe Biden, he's not a fan. He's talking about vetoing this resolution to keep SAB 121 around, saying it's all about keeping bank customers safe. But here's the kicker. The Blockchain Association and a bunch of lawmakers are saying, hold up, this SEC rule, it's cramping our style with crypto companies and stopping us from innovating. And get this, both Democrats and Republicans in the Senate, which is usually split 51-49 in favor of the Dems, actually agreed on something for once. Senator Cynthia Lummis is like, this is the first time we've gotten an independent crypto bill through in this session. No word from the White House yet, but this rare moment of agreement shows just how important this crypto resolution is right now. The Blockchain Association is out there saying the Senate's vote is a big old signal that Congress isn't on board with the SEC's regulation. They're also pointing out that young voters are really into crypto, and politicians should be paying attention. If Biden goes through with the veto, it's back to Congress, and they'll need a two-thirds majority to override it. The Blockchain Association is basically saying, Mr. President, take another look at this, will you? This whole thing might pave the way for another crypto bill, the 21st Century Financial Innovation and Technology Act. It's supposed to clarify what the SEC and CFTC will do about managing crypto assets. It's been in the works since July 2023 and might hit the House floor for a vote this May. So, yeah, that's the lowdown on the Senate's latest move. It's a rare moment of unity in politics, especially when it comes to crypto, and it could mean big things for the future of digital money. Cool, right? Before we dive into today's next market-breaking news, make sure you hit the like button and subscribe to our channel to fuel us up for even hotter content than ever. All right, let's get to the charts and talk about Bitcoin. Bitcoin is currently hovering around $66,600, up from yesterday's price of $66,000. That's a significant jump, and it's a sign that the bulls are regaining control. Overall, I'm cautiously optimistic about Bitcoin in the short term. We could see prices continue to rise towards $70,000 in the coming weeks. However, remember that the crypto market remains highly volatile, and there's always the risk of a pullback. So, as always, invest only what you can afford to lose. And remember, this is not financial advice. Do your own research before making any investment decisions. So, Binance's security wizards have whipped up this super smart anti-poison algorithm. It's like a digital superhero fighting off those sneaky wallet address scams that have been duping investors into sending their precious crypto to hackers. Here's the scoop. Binance's team has been on a roll, flagging over 13.4 million bogus addresses on BNB and another 1.68 million on Ethereum. They've got this nifty way of spotting fishy transactions that smell like trouble. Think tiny transfers or those weird unidentified tokens. Then they match these up with potential victim addresses and mark the sketchy transaction times to pinpoint the poison. And guess what? All these fake addresses get stored in Hashdight's database. That's Binance's partner in crime fighting. This move is a big win for the crypto world, keeping it safe from the address poisoning menace. Now for the real-life drama. A Vietnamese trader got caught in this web and lost a staggering $68 million to one of these scams. But in a twist of fate, the scammer got cold feet and returned all the cash after a detective named Zach XBT started sniffing around their IP address in Hong Kong. This whole mess shows that even though these scams seem easy to dodge, most traders only check the first and last digits of the wallet address. And that's where the scammers get crafty, using vanity address generators to make their fake addresses look less random and more like the real deal. So, there you have it. A tale of high-tech heists, daring detectives, and the never-ending battle to keep our digital dough safe and sound. Phew, what a ride. Let's break down JP Morgan's latest Bitcoin buzz. So, they've crunched the numbers and now say it costs about $45,000 to mine a single Bitcoin. That's up from their old guess of $42,000, but hey, it's still cheaper than the $50,000 it used to be. Here's the deal. JP Morgan's head, honcho of analysis, Nikolaos Panagirtsoglou, thinks this cost could chill at $42,000 in the long run. Why? Because he believes the mining gear will get its groove back, becoming more efficient over time. But there's a twist. Remember the Bitcoin halving event? It's like a big party for Bitcoin fans, except it cuts miners' profits in half. JP Morgan thought this would make mining costs skyrocket since miners would bail. But the plot thickened with the launch of Rune's protocol, which made transaction fees hit the roof. This was a sweet deal for miners, who made a killing post-halving. Panagirtsoglou adds that these high fees were like a band-aid for miners, helping them keep their earnings steady despite the halving cuts. So they kept on mining, and kept their wallets happy. But all good things come to an end, right? The Rune's craze cooled off, and fees went back to normal. The less efficient miners couldn't keep up and had to shut down their rigs, which meant less power chugging along the Bitcoin network. This whole saga highlights the roller coaster ride Bitcoin miners are on, trying to keep their income up, especially after these halving shindigs. As Bitcoin's price dips, the pressure mounts for the less profitable miners to pack up and leave, which could make mining costs go even higher. Experts think that Bitcoin mining might get cozy with a few big players dominating the scene, which could help slash costs and keep profits in the green. And as for Bitcoin's price, it's hovering around $65,500, just hanging out without much fuss compared to yesterday. So, that's the lowdown on Bitcoin mining economics. A world where costs, profits, and tech all dance together in a delicate balance. All right, let's get into the nitty-gritty of what went down with the Chinese police cracking down on some shady business. So, the cops in Sichuan, that's in southeast China, busted a huge illegal money transfer gig that was using Tether, USDT, to move a whopping $1.9 billion. Yep, billion with a B. These guys were catering to the not-so-legal crowd like drug smugglers and folks trying to buy property overseas without playing by the rules. The police swooped in and nabbed 193 suspects all over the place and froze assets worth about 149 million yuan. That's a lot of dough just sitting there now. The crooks were pretty slick, using USDT since January 2021 to make their illegal cash moves. But you know what they say? All good scams come to an end. This takedown happened just days after another crypto-based currency exchange in Jilin got hit for $295 million. It's like a domino effect. China's been super tight with money control, which kind of pushed these bad actors into the crypto scene. And let's be real, it's not been great PR for crypto, with even the United Nations calling out USDT as a go-to for scams and money laundering earlier this year. But hey, it's not all doom and gloom. The big names in crypto are stepping up, working with the law to clean up the streets. Like Tether, they recently helped the DOJ and FBI get back $1.4 million that was scammed from some seniors. So, there's some good news amidst the chaos, showing that crypto can be a force for good when it teams up with the good guys.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.